please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Action then. It was a positive start to the week with all the major indices closing in the green. So Nifty ended with gains of almost 1%, while the Sensex closed with gains of nearly 300 points. It was a good day for banks as well, with that index ending with gains of over 200 points by the end of the day. Mid-cap index followed the trend, closing up almost 150 points. Anuj Singhal is here as always to take us through the highlights. Anuj, bulls looking like they are in control towards the beginning of the week.
Well, good day for the market, almost in line with the script that we presented in the morning, because the market had a false breakdown on Friday. A lot of shorts came in, and today, of course, you had that reversal. This market is sensing something in Karnataka verdict as well. ICICI Bank led the big move in the Bank Nifty, of course, but it was not about just the Bank Nifty. Reliance moved, autos moved, metals moved. So across the board buying is what we had. In fact, the top 4 contributors on the index were all from different sectors. So, of course, stocks like ICICI, Axis, SBI made the biggest moves, but ITC, HUL, M&M, Hindalco, Tata Steel, all of them were higher. There were a couple of losers. Pharma stocks were down, Lupin and Dr. Reddy's, and TCS, which is interesting considering the big tailwind that IT stocks had despite a weak rupee. But then IT had a vertical rally, so some cool-off has been happening for last 3 or 4 days. In the F&O space, big gainers, PC Jeweler, it's been a doubler in 2 days. That's how this stock moves, of course. JSPL, Balrampur Chini, Reliance Infra, PTC, Exide, all of them ended closer to high point of the day. And on the losing side, you had names like Wockhardt, Ujjivan, and Strides. Looks like an interesting week because tomorrow, of course, the market will react to ICICI, and of course, the Karnataka polls is still an event that the market would want to price in before the week is over.
Oh, absolutely. We will get to the latest from the Karnataka polls. But for now, let's talk about the currency market. The rupee today touched its lowest level in the last 15 months, breaching the $67 per barrel mark. The rupee is right now, as you can see, at 67.14. The fall is, of course, seen as an impact of increased demand for dollar on the back of high crude oil prices. So while we're talking about crude, let's talk about commodities. Price of Brent crude has crossed the $75 mark for the first time since November 2014, whereas WTI crude rose above $70 per barrel on fears of a potential disruption in oil supply. The deepening economic crisis in Venezuela and concerns over a looming decision on whether the United States will reimpose sanctions on Iran is pushing prices up, at least at this point in time. But let's get you an exclusive from Deal Street in what is said to be the biggest e-commerce deal in India. We learned from sources that SoftBank, that has 20% stake in Flipkart, has agreed to completely exit the firm. Now remember, Walmart has been in conversation to buy out a majority stake in Flipkart. The conflict really was if SoftBank wants to completely exit, partially exit, or stay invested in Flipkart. Negotiations have been thick and fast, and we understand from our sources that the chairman of SoftBank, that the global chairman of SoftBank, Masayoshi Son, has finally given a nod. The board is yet to clear this, but we do understand that he is likely to come down to India soon to finalize the details. We understand in terms of valuation, this is going to be one of the biggest exits of SoftBank. So when they had invested originally, they were at anywhere between about $2.2 billion of an investment. So they are looking at a return of almost 60%. Our sources say that the amount that they are likely to get could be anywhere between $4 to $4.5 billion. $4.5 billion is the realistic figure that is being looked at this point in time, but we don't know if things could change at the last minute. We haven't gotten a confirmation from SoftBank officially yet. But let's get from one exclusive to another, and this one's from the stressed asset space. We learned that officials from the Power Ministry are set to meet RBI officials tomorrow. During this meeting, Power Ministry is expected to raise its concerns regarding RBI's 12 February circular on stressed asset resolution. So what will that entail? Lata Venkatesh is here with the details. Lata, what can we expect in terms of changes that the Power Ministry is expected to seek?
Well, the Reserve Bank's February 12th circular, if you remember, said that all loans over 2,000 crore, if stressed, would get 6 months to be resolved, and if not, they would be marched to the NCLT. As it happens, a large part of that are power companies, and in fact, as we have reported several times, as much as about 2 lakh crore could go to the NCLT, and some as early as September, when the 6-month period since the circular ends. So the Power Minister, even on our channel, speaking to Anshu, has had spoken against it, And now the meeting that he so much wanted to call with the Reserve Bank officials is happening tomorrow. Among the things that the ministry is seeking is that the Reserve Bank rule says that on the due date, the clock starts ticking for resolution. They want due date plus 30 days because, you know, payments from SEBs and stuff like that, the discoms can take time and therefore don't keep due day. The other thing is that you have to resolve in 180 days from the date of missing of payment. They want it to be 365 days because they believe a resolution can't happen in 180 days. And then there are other smaller issues like, you know, there are already processes underway, like if you remember SDR, strategic debt restructuring, S4A, strategic restructuring of stressed assets. All those were, all those were dissolved as of February 12th, and RBI said hereafter you can resolve it any which way you like, but you get 6 months. The processes that were already underway, the ministry wants that to continue, and they be given a deadline of September 30th. So that's another demand which they are making. And a fourth demand they are making is that, 100% of the bankers need not agree. If 75% agree, that is enough. Actually, the Reserve Bank has already clarified that it is not looking at 100% or anything, so long as the resolution comes from the banks. Now, the point is, how much will the Reserve Bank give in? So far, the Reserve Bank has not given in to any. And I spoke to sources close to the Reserve Bank and to other bankers who could be aware of the meeting. And they said it looks extremely unlikely because when steel went through hell, Reserve Bank didn't give any special dispensation to steel. The special dispensation or, protection came from the ministry in terms of MIP. So the Reserve Bank's position would be the ministry has to push discoms into good behavior or whatever, and that they will not carve out for any subsector. This is what I'm picking up, but, anything can happen at the meeting.
Well, absolutely. Anything can happen. Thanks, Lata, for that. And of course, we'll have Lata back when we have more clarity on what happens in that meeting. But let's talk about another exclusive from the stressed asset space. We learned from sources that JP Infratech lenders are still divided over Lakshadweep's offer for the company. Now, this is just a day before the lenders are to vote on the final resolution plan for the company. Remember, Lakshadweep has offered 7,350 crore rupees to be precise for debt-laden JP Infratech. Ritu Singh is here with the exact details. Ritu, if the highest offer is not good enough for the lenders, what really then happens? Will this even go through at all?
That's right. A day before the lenders and the COC are expected to vote on the final resolution plan for Jaiprakash Infratech, bankers are fairly divided on how to consider this offer from Lakshadweep, that is currently the winning bidder, chosen over Kotak Cube JV, as also JSW and Adani Group's offers. We understand that Lakshadweep's offer is close to 7,350 crore rupees, of which 4,000 crore rupees is for the land of JP Infratech, 1,200 crore rupees in cash repayment to the lenders, and the remaining amount in long-term NCDs and a small equity stake as well that will be given to the bankers. But we understand that banks feel that this is grossly undervaluing the company, the liquidation value alone for which is about 12 to 14,000 crore rupees, and therefore tomorrow's vote is difficult to say whether or not this final resolution plan from Lakshadweep will get the requisite 75% votes, because if it does not, the company will have to head into liquidation.
Okay, fair enough, Ritu. Thanks for joining in with that. But here's yet another exclusive from the banking sector. The centre is expected to review the recapitalisation requirements of public sector banks after the first quarter of the current fiscal. And sources tell us that the second tranche of recapitalisation for public sector lenders may not be announced anytime soon. So what really happens now? Sapna Das is here with more on this exclusive news break. Sapna, if not now, by when can we expect the centre to actually initiate the second round of recapitalisation for PSU banks then?
Well, first of all, the clear indication is this, and this happens almost every year, that they'll wait for the first quarter of the current financial to be over for a better assessment of the recapitalization requirements of the public sector banks. The first tranche of recap of worth around 80,000 crores worth of bonds, they were the plan was announced in Jan, and the infusion had happened by March FY18, so that's pretty recent. In the meanwhile, the government has also asked for a status report from all the public sector banks in terms of those 60 parameters of reforms which they had announced along with the recapitalization plan way back in Jan. So that's for FY18. So there will be a proper assessment, where things stand as of now, what is the credit growth rate, stuff like that. So probably the understanding is that as of now, it may be somewhere around the winter session of the Parliament when the requirement for the next tranche of recapitalization will come up. So that's one. Second, we also understand that as of now, the way things are, there may not be requirement of additional capital. At least that's what the anticipation is. Even the numbers are not very firm right now. The results have yet to come out, and then the first quarter analysis, where do they stand in terms of reforms, stuff like that. So somewhere around winter session of Parliament, that means around November is when you can expect, and no additionality is being announced till then. The government is also very clear at its end that a couple of things which are already in place, like for example, public sector banks selling off the non-core assets. Also in terms of the recoveries which are expected under the insolvency and the bankruptcy code, we have a lot of developments happening on that space thick and fast. So all that is also going to help in terms of the fact that additional capitalization, at least at this stage, is ruled out. Apart from this, every time the government recaps the banks, obviously the stake goes up in these public sector banks. So possibly by the end of this financial year, most of these banks will be having a substantial Government of India stake.
Absolutely.
They can also look at some kind of listings later on, but not as of now.
Okay, fair enough. That's a comprehensive plan there. And of course, we'll have Sapna back as and when things develop on that front. We'll leave it at that, Sapna. But let's take a very, very short commercial break on that note. Up next, there's relief for Vodafone as the Delhi High Court refuses to stop the UK arbitration process. Details on the other side. Stay right there. Welcome back. Now, the centre today suffered a setback of sorts as the Delhi High Court dismissed its plea challenging Vodafone's move to initiate 2 international arbitration proceedings against India. Remember, the erstwhile UPA government had imposed a tax liability of 22,000 crore rupees on Vodafone retrospectively on its $11 billion Hutchinson SR acquisition. The telecom giant had initiated arbitration proceedings under the India-Netherlands Bilateral Investment Protection Agreement, or the BIPA, and later under the India-UK Bilateral Investment Protection Agreement. Ashmit Kumar is here with exact details. Ashmit, what were the court's observation and which way is this case headed now?
Well, at least as of now, there is clarity that has emerged by way of this latest order that there is nothing stopping Vodafone from initiating these proceedings under the BIPA. Now, what's interesting, as you rightly pointed out, Vodafone had issued notice to the government of India on the back of that tax notice, first under the India-Netherlands BIPA and then the India-UK BIPA. And that was the root concern that the government had. The government concern essentially was that for the same remedy, which is to seek exemption from that tax demand, can 2 different processes be followed with identical reliefs that are sought? That was essentially the concern that the government had, that I am being sued in return for the same tax demand twice over. That's the government's concern. However, what the High Court has done, at least as of right now, is that it has clarified the position that this would not be in violation of the BIPA or in violation of the sovereign laws of India, and that this is a remedy that is available to Vodafone, the telecom giant. It can avail of these, and by in doing so, it has rejected the government's application seeking challenging parallel proceedings, and in doing so has allowed Vodafone a clear path to initiate notice proceedings against India under both the India-UK BIPA as well as the India-Netherlands BIPA. Of course, we'll have to see whether or not Vodafone will issue signals to the government to consolidate these proceedings. But as of now, a big relief coming in for Vodafone, the British telecom major. Back to you.
Oh, absolutely, Ashmit. Thanks for joining in and breaking that up for us. But moving on, 2 weeks after Vice President Venkaiah Naidu rejected the impeachment motion against CGI Deepak Mishra, 2 Congress MPs have moved the Supreme Court today challenging that very decision. Now, in their petition, the 2 MPs, Pratap Singh Bajwa and Ami Harsdarya Rajnik, argued that the Vice President's decision was arbitrary and illegal. They also sought the constitution of a judges' inquiry committee to probe the charges against the CGI. Senior advocate and Congress leader Kapil Sibal mentioned their plea for an urgent listing before Justice J. Lashmeswar. After Sibal was asked to mention the case before the CGI, Sibal said that since the motion concerns the CGI, he cannot list nor decide who will hear this very case. Now, the petitioners were then asked by the court to return on Tuesday. So we will get some clarity tomorrow. But meanwhile, the centre's proposal to impose a sugar cess triggered a big debate within the GST Council and led to the constitution of a group of ministers last week The panel, which has about 5 members, will deal with that issue along with its likely impact. Meanwhile, the Finance Minister of West Bengal, Amit Mitra, has spoken out against the idea, echoing the views of some of the other BJP finance ministers who have spoken to CNBC TV18 over the last few days. Amit Mitra, in fact, also said that the introduction of the sugar cess will destabilize the GST structure. Take a look.
What is very striking in its destabilization process is the introduction of one cess, one item, benefiting one state. What is the political economy of this? Maybe Maharashtra as well, but UP is obviously the target. And total collection 6,700 crores. Now look, that is zero, less than a fraction, much less than even a 1%, 0.5% of the expenditure of the central government, where tax buoyancy has happened. Direct taxes have gone up. So why can't you accommodate 6,700 crores from other sources?
Okay, we will take a quick break on that note. On the other side, Congress and BJP trade blows with the Karnataka polls knocking on the door. Who said that? We'll bring you all the action on the other side of this short break. Welcome back on to another CNBC TV18 exclusive now. We learned from sources that Renew Power will file the DRHP for its IPO in the next few days. Remember, Renew Power is India's largest renewable energy producer after its recent acquisition of Austro Energy. Sonia Shenoy, who broke that story earlier today, is here with the details. Sonia, what more can you tell us in terms of the timeline and the valuation of the company?
Yes, we do understand from sources that within the next 2 days itself, Renew Power will be filing for an IPO, and it is, as we know, the largest player in the renewable energy space. Now, we understand that the amount that they raise could be to the tune of about $800 to $900 million. It will be a fresh issue, plus it will be an exit opportunity for the PE player Goldman Sachs. Remember, Goldman was one of the lead investors in Renew Power. They had invested about $370 million or so. So they will be selling part of their stake within this IPO. Now, Kotak, JM Financial, Bank of America, Merrill Lynch and JP Morgan, we understand, are lead bankers for this IPO. As I said, Renew Power is the biggest player in the renewable energy space. It has now a capacity of more than 5,600 megawatts. This is after the recent acquisition of Austro Energy from Actis for $1.75 billion. So now it makes it the biggest player in that space. As you know, Renew Power was started by Sumant Sinha in 2011. He was the former COO of Suzlon. So, of course, this is a much talked about IPO, and $800 to $900 million is the amount that they could raise.
Okay, $800 to $900 million is the amount that they are looking at raising at this point in time. Thanks, Sonia, for taking us through that. Well, with just 5 days to go for voting, both the BJP and the Congress have intensified their campaigns for Karnataka Assembly polls. The BJP is banking heavily on Prime Minister Narendra Modi, who is holding 3 rallies in the state today. He has also been interacting with various segments of BJP workers. And as a part of that series, today he addressed the BJP Yuva Morcha workers via the Namo app. Now, BJP Chief Amit Shah and UP Chief Minister Yogi Adityanath are also in the state, and they are holding several public meetings as well. On the other hand, Congress President Rahul Gandhi, who is the star campaigner for the party, toured Kolar district, where he led a protest over fuel prices. Former Prime Minister Manmohan Singh also joined the Congress campaign in Karnataka today. Addressing a press conference in Bengaluru, Manmohan Singh lashed out at the Modi government, accusing it of systematically dismantling the Indian economy. Listen in to the war of words that ensued today. Okay, we will get you those bites later, but with that, we are completely out of time on this edition of After the Bell. Thank you so much for watching. Stay tuned to CNBC TV18. Markets Today Talk Back is up next.